Please confirm if I am audible. Please confirm if I am audible. Okay, so let's start the class. Sorry for the technical issue. Okay, so let's welcome to the second class of your ACCA Financial Accounting. Today we are going to revise what we have studied in our first class. Then we will solve the question which are related to the topics that we have already studied in the class number 1. So what we were studying? We were studying chapter number 1, that is financial reporting and financial statement. So in first chapter we have studied financial reporting. What is financial reporting? It is recording, analyzing and summarizing of the financial data to present in the form of financial performance and financial position. Financial performance and financial position are the statements of financial statement which is going to be used by the users of financial statement. Then we have studied financial accounting. What is financial accounting? Financial accounting is a method of financial reporting. Financial accounting is a method of financial reporting which primary concern is not to serve information to the people for the efficient running of the business. It is not the primary function or responsibility of the financial accounting to provide information for the efficient running of the business, because it is the primary function of the management accounting and not of the financial accounting. And financial accounting, it provides historical information. Financial accounting provides historical information, not about the future, not do the future prediction and for projection. So all the transaction or the events which already took place, financial accounting provide information regarding that only. Then later we have studied nature, principle and scope of financial statement, where we have studied statement of financial position and statement of profit or loss. Okay. Why, when we were studied this, we have studied that statement of financial position are the balance sheet which show the position of the worth of a business on a particular date or on a particular time. It does not show you the position of a business over a period of time, either for a particular day or at a particular time. It carries the amount at a carrying value of asset, liabilities and owner's capital or equity. Then later we have studied statement of profit or loss or other comprehensive item, where we have studied that this can be prepared together. Both statement of profit or loss or OCI can be prepared together or can be prepared separately as a separate statement. A statement of profit and loss will consist all the income and expenses related to the business over a period of accounting year. It includes revenue and expenses, or you can say income and expenses for a particular period of time. Then comes other comprehensive item, where all the items which are not included in the statement of profit or loss becomes the part of other comprehensive items. All types of business entities prepare statement of profit or loss. However, companies are required to prepare OCI. We have studied till now. Okay, we have studied that in our previous classes. And last but not the least, relationship between statement of financial position and statement of profit and loss. The in a year, suppose year starts from this and end in this date. So the beginning of the year will have a statement of financial position which shows you the position of a business at beginning of the period, whereas you will also have statement of financial position at the end of the period. But the statement of profit and loss will cover all the transactions which are related to income or expenses for the accounting period. It will cover all the transaction which took place between the year. So statement of financial position will be prepared for a particular date or at a particular time, but statement of profit or loss will be prepared for the entire accounting period. Okay, so till that we have studied in our first class. Now we are going to solve questions which are related to the topics which we have already studied. So this is your question bank. We are going to solve questions from This question will include question from ACCA Study Hub, DPP and Kaplan. We are going to solve question according to the topic that we have studied, and in this same question bank at the last page you will have all your suggested answer regarding the question asked above. So you can check on the real time basis whether your answer is correct or not. Okay. Suppose if a chapter has 20 questions, I will solve most of the question in the class itself. Suppose if I solve 12 questions, then remaining 8 questions will be your homework. Then remaining 8 questions will be your homework, so that we can meet again on the live query session and where we can discuss the doubts regarding that homework. Okay, so now let's start with the question for the topics which we have already studied in class number 1. Question number 1. A business prepares a statement of financial position. A business prepares a statement of financial position, that means balance sheet, at the end of accounting period. At the end of accounting period, choose the correct option. Choose the correct option from the following descriptions of the characteristics of the statement of financial position, whether they are true or false. So what we have to choose? We have to choose which are the statement given in the question are true or false. Okay, so let's start with the first statement, that is statement number A. The statement of financial position is prepared to reflect the position of a business on a particular day, whether this is true or false. What the statement is saying? Statement is saying the statement of financial position, that is balance sheet, is prepared to reflect the position of a business on a particular day. True or false? True. This statement is true. This statement is true because the statement of financial position will show you the position of a business on a particular date. Option. Then comes statement number B. The statement of financial position records the income and expenses of the business. No, the statement of financial position does not record the income and expenses of the business. The statement of profit or loss will record all the income and expenses, not statement of financial position. So this statement is false. Then comes statement number C. The statement of financial position records the investment of the owner of the business. True or false? True, because statement of financial position will include asset, liabilities and equity balance. So it will show you the amount invested by the owner of the business. This statement is true. Then comes statement D. The statement of financial position shows asset of the business and how they are financed. True or false? True, because the statement of financial position, or you can say balance sheet, show you the asset, liabilities and equity or capital funded by the owner. So this statement is true because it will reflect you the how much of a asset are purchased from finance and how much of a asset are purchased from the equity or the owner's own contribution. So this statement is also true. So our correct option will be in which statement number A is true, statement number B is false, statement number C and D are true. Okay, so let's start checking option number A. Option number A says that statement A is false. So this is not correct. Statement number B is true. This is also not correct. Statement number C is false. This is also not correct. Statement number D is true. So this is correct. Okay. Now check option number D. Option number B says statement number A is true. That is true. Then statement number B is false. Correct. Statement number C is true, but it shows false. So this is not correct. Then statement number D, true from our side, true from option also. Then comes statement number C. Then comes option number C. Statement A, true, true. Statement B, false, false. Statement C, true, true. Statement number D, true, true. Okay, so this option has all the correct option. Now also check option number D. Statement A, true, true. Statement number B, false, correct. Statement number C, true, this shows false, so not correct. Statement number D, true, this shows false, so not correct. So what is our correct answer? Our correct answer is option number C, where statement A is true, statement B is false, and statement number C and D are true. So option number C is our correct answer. Okay. Now comes to the next question, which are related to the topics which we have already studied. Question number 2 and 3 are related to the topics which we have not studied yet. We will study it in the today's class or upcoming class, then we will able to solve it. Okay. Now comes question number 4. Which two of the following statement might be used to define the terms financial reporting? Okay. So you have to choose two correct statement which can be used to define the terms financial reporting. Okay. So let's start checking the statement. Option number A. Financial reporting can be used to calculate the profit of a project. Can financial reporting can be used to calculate the profit of the project? No. You cannot calculate the profit of a project which is about to begin by using the financial reporting. So option number A is not correct. Then comes option number B. Recording of all the transaction of a business. Does financial reporting records all the transaction of a business? Yes, because the very basic meaning of the financial reporting start with the heading recording, analyzing, and summarizing. So yes, it records all the transaction of a business. Okay, so option number B is correct. Now start reading option number C. Summarizing of financial performance and position of a business. Can financial reporting be used to summarize the financial performance and position of a business? True, because it consists profit or loss and balance sheet of the financial statement. So financial performance and position can be summarized by financial reporting. So option number B and C both are correct. Now check option number D. Presenting future cash flow for decision making. No. All the financial reporting does not deal with the future projection or the future outcome of future information. It only deals with the historical information. So option number D is not correct. So option number A is wrong. Option number D is wrong. So what are the correct option? Option number B and C. So option number B and C can be used to define the term financial reporting. Okay. These all things are included in your notes. So if you read your notes, you will be able to solve all the questions. Okay. Now comes option number. Now comes question number 5. Okay. A company is preparing financial statement at the end of the accounting period. A company is preparing financial statement at the end of the accounting period. For each item, select the financial statement which would be shown. So what we have to do, we have to select the financial statement for the item in which it would be shown. Okay. So you have first option number A. You have first item number A, that is the amount of money owed to the owners of the business. So where it will be shown? It will be shown either in statement of profit or loss or statement in financial position. We have to tell that only. Okay. Then you have item number B, the debts of the business. Then you have item number C, the amount of overhead expenses required to run the business for 12 months. Then you have option number D, the amount of cash fit for non-current assets. So I am just giving you 2-3 minutes to check and give the answer which of the following answers are true and what are the options we should select. Okay, so let's read the question and then we will meet after 2-3 minutes with the answer. Okay, so I am giving you this homework for now for 2-3 minutes. Okay, so we will meet again. Just read the question and start making answer in your mind which option should be the correct option for each item. Okay, so I hope you have done with the reading. Let's start solving the question and check whether the answer is correct or not. Okay, so what we have to do, we have to choose which of the following items will be shown in which statement. Okay, so statement number 1, the amount of money owed to the owner of the business. The amount of money owed to the owners of the business, where it will shown. The amount of money owed to the owners means liability. The amount of money owed to the owners of the business means liability. So where it will be shown? It will be shown in the statement of financial position, because statement of financial position deal with the asset and liabilities part. Okay, so it will be shown in the statement of financial position. So we will write SOFP. Okay. Option number B, the debts of the business. The debt, sorry, this was asset. Okay, this was asset. Now, now statement number B, the debts of the business. So, whatever the debt the business has owed is their liability, and where it will be shown? It will be again shown in the statement of financial position. It will be again shown in the statement of financial position. Okay, then you have item number C, the amount of overhead expenses required to run the business for 12 months. Overhead expenses, where the expenses are recorded? Statement of financial position or in statement of profit or loss? In statement of profit or loss, because these are the items of your expense, so it will be recorded in statement of profit or loss, so SPL. Okay, then you have item D, that is amount of cash paid for non-current asset. Amount of cash paid for non-current asset. Okay, now you have paid the cash. You have paid the cash to buy some non-current asset, where it will be shown either in statement of profit or loss, in statement of financial position, or in cash flow. Some of you might think that it should be shown in the statement of financial position because it is for the non-current asset, but the state item is not saying that we have purchased the non-current asset. It tells about the amount of cash paid, so we have to tell what should be done for the amount of cash paid. It should be shown in the statement of cash flow. It should be shown in the statement of cash flow and not in statement of financial position, because we have to tell what is the treatment of statement or what is the treatment of cash paid. Okay, so our correct answer is statement of financial position, statement of financial position, SPL, and statement of cash flow. Okay, so now choose which option has all this answer. Option number A, no. Option number B, no. Option number C, statement of financial position, okay. Statement of financial position, okay. Statement of profit and loss, okay. Then option number D, statement of cash flow, okay. So our correct answer for this question is option number C, where the first item should be shown in the statement of financial position, the second item should be again shown in the statement of financial position, and third item should be shown in the statement of profit or loss, and fourth item will be shown in the statement of cash flow. The correct answer is option number C. Okay, now let's check question number 6. Which of the two following items would be included in the equity section of the statement of financial position? What we have to tell? We have to tell that what are the two options that should be shown in the equity section of statement of financial position, that is balance sheet. Okay, so if you look option number A, inventory. What is inventory? Inventory is your current asset. Okay, so inventory is your current asset. What is current asset? What is non-current asset? We are going to study that also in our next classes, because we are able to solve some question, then we should solve in this class only. So inventory. What is inventory? Inventory is your current asset. It should be shown in the statement of financial position in asset. So this is not a equity, this is asset. Then comes option number C, bank loan. Bank loan means your liability. So this is not also your equity. Then comes option number D, land and building. You have some land or building in your books, in your business. What it is? It is your asset. So again, not a equity, it is the asset. Then comes option number E, retained earning. We don't know what is retained earning because we have not studied yet. Then comes option number F, cash and bank. You have some cash in your hand and some cash in your bank. Okay, so this is your asset. So we have talked about all the options that are given, either they are asset, either they are liability. But option number B and option number E, we have not studied yet, and we don't know whether they are asset or liability. But I should tell they are equity, because whatever the share capital you have, whatever the share capital you have is your equity, because it is the amount of the owners of the business who have given contributed for the capital. So it is the equity part. And the retained earning. What is retained earning? Retained earning means the income which is not distributed to the owners. Retained earning are the part of the profit which is not distributed to the owners. So this is also becomes the part of equity, because who are going to be the ultimately when get benefit from this? The owners. So this is the part of equity. So option number B and option number E is the correct answer of this question. Option number B and option number E. Okay. So we have solved some question regarding the topics which we have studied in previous class. Now we should start with the fresh topics of second class, so that we will finish this chapter as quick as possible, and we'll start with the practical subject. We have with the practical chapters of this subject. What how we are going to study? We are going to study some theory topics, then some practical chapter, some theory, some practical, so that you don't get bored during the classes. Okay, so this is our approach going to be for the upcoming classes, where we will make some chapters which are based on the concept, principle and theories. Then we will study some practical chapters, so that the engagement is also created for the classes. Okay, let's have a 2 or 3 minutes break, then we will start again with the new topics. Okay, so let's have a 2-3 minutes break and we will start again. Okay, so now start with the fresh topic for this class. In previous class, we have studied nature, principle and scope of financial statement, where we have studied statement of financial position, which is also called as balance sheet. Then we have studied statement of profit and loss and other comprehensive items. Now we have to study what is statement of cash flow. Okay, so let's start with the statement of cash flow. Let's read first. It is a primary statement. It is a primary statement that shows the overall view of the inflow and outflow of cash over the period and the balances of cash at the end of the period compared with the balances at the start of the period. Let's read again. What is cash flow statement? It is the primary statement that shows overall view. That shows overall. Overall means everything. Overall view of the regarding inflow and outflow of the cash. Regarding inflow or outflow of the cash over the period. Over the period and the balance end. Now focus on the word end. What did this show? It shows overall inflow and outflow of the cash over the period and it shows the balances of cash at the end of the period compared with the balance at the beginning of the period. Okay, now let's understand what does this line mean. Suppose my year or my accounting period starts from 1st of January 2026. My accounting period starts from 1st of January 2026 ends on 31st of December 2026. So from where my accounting period starts, it starts from 1st of January and it will end on 31st of December. Okay. At the start of the accounting year, I have a balance of cash. I have a balance of cash of suppose dollar 10,000. So I have $10,000 at the start of my accounting period, that is on 1st of January 2026. Now on end of the period, that is 31st of December 2026, I have a balance of $20,000. I have a balance of $20,000. So what does statement of cash flow will provide me the information? The statement of cash flow will provide me the information regarding whatever the inflow and whatever the inflow and outflow of cash took place during the period. So it will show me how much of a cash has been inflowed and how much cash has been outflowed from my accounting period from first date to the last date over the entire period. So statement of cash flow is going to provide me the information regarding inflow and outflow of the cash and it will also show me the comparison of the cash at the end of period. End of period means this, with the balance at the start of the period, or you can say beginning of the period, like this. So statement of cash flow is all about what are the inflow and outflow of the cash during the period of accounting period, during the period of time or over the period of time, and it will also make you see the comparison between cash at the end of the accounting period with the cash at the opening or with the beginning of the accounting period. So this is your statement of cash flow statement. Okay, now read again. The statement of cash flow, it is a primary statement that shows an overall view of the inflow and outflow of cash over the period of time, and means plus the balances of cash at the end of the period compared with the balances at the start of the period. So it will show whatever the inflow and outflow took place during the or over the period of time, and how my cash is compared with the opening and closing balances at the start or at the end of the period. Okay. Now it is to be required to be prepared for companies only. So who are required to prepare statement of cash flow? Only companies. Sole proprietorship, partnership firms are not required to prepare statement of cash flow. Only companies are required to prepare statement of cash flow. Okay. It classifies the movement of cash. It classifies the movement of cash. Movement means inflow and outflow. Movement means inflow and outflow. It classifies the movement of cash into three categories: inflow and outflow into three categories. What are these categories? First, operating activities; second, investing activities; and third, financial activities. So all the inflow and all the outflow will be shown will be shown in three categories, either in operating activities, or in form of investing activities, or in form of financing activities. Okay, let's understand what is statement of cash flow with a detailed example. Now we are going to give you the example so that you will be able to understand what is statement of cash flow. Okay, suppose I have a classes where I teach ACCA to students. I have a classes where I teach ACCA. Okay, my year starts from my accounting period starts from 1st of January 2026 and going to end on 31st of December 2026. Okay, at the start of the period I have a cash balance of at the start of the period I had the cash balance of dollar dollar 10,000. Okay, I have the cash balance of dollar 10,000, and I don't know about the cash balance of date 31st of December 2016. I don't 2026. I don't have the balance of cash that is going to be with me at the end of the period. Okay, now I have to divide all my inflow and outflow in the form of three categories. First one is operating activity. First one is operating activity. Second one is investing activity. And third one is financing activity. Third one is financing activity. Okay. Now all the cash flow or in the form of inflow or outflow is going to be divided in the form of three categories: operating activities, investing activities, and financial activities. Now suppose, what are operating activities, what are investing activities, and what are finance activities? We are going to study all these topics again in their separate chapter. You have a separate chapter regarding cash flow statement. We are going to discuss each and everything in detail, but today I am giving you just an overview so that you can understand what is statement of cash flow, and you will be able to solve question related to the statement of cash flow theory in chapter number 1. Okay, so suppose what is my business? I have a business of running ACCA classes. I have a business of running ACCA classes. So whatever cash comes in to me or cash goes out from me, that is inflow or outflow, regarding that classes will be categorized in operating activity, will be categorized in operating activity. Suppose if I purchase this calculator, so purchase of this calculator is outflow. Purchase of this calculator is outflow for me because I have to pay money for buying this calculator. And where this calculator is going to be used? This calculator is going to be used to teach ACCA students. So this is my operating activity. This is my operating activity. So outflow of cash for this purchase will be my operating activity. Okay. Now some student has paid me fees. Some student has paid me fees to be taught ACCA. So that inflow of cash to me, for coaching classes is my operating activity, because my business is to run ACCA classes. So that inflow is also my operating activity. Okay, but if I have purchased some property, for my investment purpose and not for my classes, I have suppose purchased my house. So that purchase of house is my investing activity. This purchase of house is my investing activity, because this is my asset. So that purchase of house and the outflow of cash is will be categorized in investment activities. And same way, suppose some amount has been received by selling that house. Suppose I am going to sell that house also, which I have purchased after 2 or 3 months. So the proceed of money from sale of such house will be my inflow of cash in investing activity category, because it is not related to the operating activities. Whatever the money I receive in the form of classes and fees will be my operating activity, but whatever the money I receive by selling that house is my investing activity. And same way, suppose if I have taken loan to buy something, so that receipt of money from loan, when I take loan, the bank will give me the money in the form of loan. So that receipt of money in the form of loan is my financing activity, and whatever the EMI I have to pay to bank regarding that loan is my also financial activity, So suppose I have certain inflow of cash in the form of operating activity. Suppose if I have certain inflow of cash in the form of operating activity, suppose 5,000. Suppose 5,000. And I have outflow of cash in the form of operating activity of 3,000. So net what is my net inflow or outflow in the form of operating activity? That is 2,000. 5,000 minus 2,000 is my net inflow in the operating activity. Now, suppose if I have received $10,000 from investing activities and have paid $20,000 in form of investing activities. So I have outflow of $20,000 in investing activities. So what is my net result? My net result will be negative $10,000. My net result is negative. That means outflow of $10,000. Okay. Then suppose if I have an inflow of $30,000 from financing activity. Suppose if I have an inflow of $30,000 from in financing activities and have an outflow of $8,000 from financing activity. So what is my net inflow? My net inflow is 22,000. So I have a inflow of 2,000 from operating activities. I have a outflow of 10,000 from investing activity, and again I have a inflow of 22,000 from financing activities. If I make a sum of all this by using calculator, what is my net inflow or outflow? So 2,000 minus 10,000 plus 22,000 is equals to 14,000. That is my net inflow. From all the activities. That is my net inflow from all the activities in a year. Or you can say in a accounting period. So what is my opening balance? 10,000. And what is my net inflow? 14,000. That is, I am going to end up with 24,000 of dollar at the end of the period. So what does the statement of cash flow will tell? The statement of cash flow is going to tell you that your closing balance of cash at the end of the period is going to be compared with the opening balance. So in the opening you have $10,000, at the end you have $24,000, and you have a net inflow. From all categories, that is $14,000, and you have a bifurcation also, that you have how much of an inflow and outflow is regarding operating activity, is with regards to investing activity, and is regard with the financing activity. So this is statement of cash flow is going to tell you and provide information to you about the period. Okay, so now read again. Now I think you will be able to understand more easily what is statement of cash flow. It is the primary statement that shows the overall view of the inflow and outflow of the cash over the period and the balances of cash at the end of the period compared with the balance at the start of the period. It is required to be prepared only for companies. It is required to be prepared only by the company. So this is important part because most of the MCQs ask this. So if a MCQ asks whether a partnership firm or sole proprietor are required to prepare cash flow statement. So the answer is false. Only companies are required to prepare cash flow statement, not a sole proprietorship or not a partnership firm. It classifies the movement of cash, movement means inflow or outflow, into three categories. That is, first, operating activity, second, investing activity, and third, financial activities. We are going to study this as a separate chapter in your course, so where we will discuss and solve all the questions related to this. So as of now, this is enough for you to understand what is cash flow statement. Okay, so we are done with statement of financial position, statement of profit or loss, and statement of cash flow. Now we have statement of changes in equity. Now we have statement of changes in equity. Now let's start reading. It is again a primary statement. Whatever the statement we have studied, both all are primary. Okay, so this is also a primary statement which is required to be prepared by companies only. Again, to be required to be prepared by companies only. So sole proprietorship, partnership firm are not required to prepare statement of changes in equity. Okay, this reconciles the equity balances at the start and at the end of the accounting period. What does it do? It reconciles the equity balances at the start and at the end of the accounting period. Now, what does reconciliation means? What does reconciliation means? Reconciliation means matching. Reconciliation means matching two things. Matching two things or two data. Suppose if I say on 1st of January 2026, on 1st of January 2026, the balances of equity was $1 lakh, and if I tell you on the end of the period, that is 31st of December 2026, the balance of equity was $1,20,000. So what data you have? You have that at the start of the period, that is 1st of January, you have the balance of equity of $1 lakh, and at the end of the period, that is 31st of December 2026, you have the balance of equity of $1,20,000. Now if I ask you to please give me the reason why these balances are different on the beginning of the period and at the end of the period, and if I give you the information that during the year, that is during the year, suppose 1st of May 2026, $20,000 of equity were issued. 20,000 worth of dollar of equity were issued. So it added up the $20,000 in your opening balances, and hence the closing balance went from $1 lakh at the beginning to $1,20,000 at the end. So this is means reconciliation. So statement of changes in equity will tell you what is the how the opening balances and closing balance of the equity are and how they change, whether new fresh shares are issued or where some shares are buyback. Okay, so statement of changes in equity will tell you about the equity balances at the start and at the end of the accounting period and does the reconciliation of the same. And again, it is to be required to be prepared by companies only. Okay. So this is again the one of the statement of financial statement that we have studied. Now comes last but not the least, non-financial reports. This includes all the reports which are not part of the above. So what is NFR? Non-financial report means all the statement which are not being part of the above statement are included here. Suppose ESG reporting. If you have a environmental, social and government reporting requirement, 1 minute. Suppose you are required to give the reports regarding environmental, social and governance, that is ESG report, which does not form part of the statement of financial position or not of the statement of profit and loss or not of statement of cash flow or not of the statement of changes in equity. So it will be covered here in the heading non-financial reports. So all the reports which is non-financial in nature are going to be covered in this. Suppose ESG report. Okay, so now let's give a simple one reading of this topic and we will finish with the topic. So, focusing on the environmental, social and government ESG factor alongside traditional financial data, non-financial information is increasingly crucial for investors to assess the long-term growth and stable return and leading to greater emphasis on the sustainability and integrating reporting. So, all the reporting which are non-financial in nature are going to be reported in this heading non-financial reports. So, this is the complete view of the main financial statement of businesses, which are statement of financial position, statement of profit and loss, statement of cash flow, statement of changes in equity, and last non-financial reports. Okay, so we are done with this topic. Now we have to study next topic, that is user of financial information and financial statement. Okay, so let's have a 1 or 2 minute break, then we will start with this topic. Okay. Okay, so now start with the next topic, that is users of financial information and financial statement. So in this topic we are going to learn who are the users of financial statement. We have studied what is financial statement. Financial statement consists statement of financial position, statement of profit or loss, statement of cash flow, statement of changes in equity and non-financial report. Now we are going to study who are going to use this information either in financial statement form or either in financial information form. Okay, so first one is business owner. Who is the first user of your financial information? Business owner means the owner of your business who have invested their money, who is working for the business. So they might should know the financial information, financial statement to assess the financial position of your business, because if you are the owner of a business, you should know what is your financial position and what is your financial performance. So you want to know both. You want to know both what is your financial performance and what is your financial position. So business owner are supposed to know the information, and that why they will use the financial information and financial statement to know the financial position and financial performance of your business. That how much profit you are earning, how much loss have you incurred, how much asset do we have, how much liabilities are we required to repay. So business owner are the first person who are required to use the information of financial statement. Okay, so first one is business owner, then comes second, investor. Now why investor? Why investor is the user of your financial statement? Why investor is the user of your financial statement? Because investor has invested his money in your business. Investor has invested his or her money in your business. So he might be interested to know how much money you are making, how much profit you are making, and how much of a loss have you incurred. So investor is also the user of your financial statement, because he wants to know how much of a progress have you made. So investor is again a user of financial information. Then comes third, employee of the company. Now comes third, employee of the company. Employee of the company is also uses your financial statement to know whether your company is performing good or bad, whether your company is good for his future and he should continue with your company. So employee also uses the information provided in the financial statement. So the first one is business owner, because his money invested. Second, the investor who has invested his or her money in your business and trusted you. Then third one is employee of the company. These are the three people who are the users of your financial info statement or financial information, who are the internal stakeholder. So investor, business owner, and employee of the companies are the internal stakeholder of your user of financial statement. So these users are the internal stakeholder. Now what is internal stakeholder? Who are involved in day-to-day business of the organization, who are involved in the day-to-day business. So whoever are involved in your day-to-day business of the business are your internal stakeholder. So in user of financial statement, you have three people, that is business owner, investor, and employee of the company, who uses the financial information and who are also the internal stakeholder, because they are the person who are involved in the day-to-day business of the company, or a business. So first three users are business owner, investor, and employee. Now comes other users of the financial information or financial statement. First one is prospective investor. Now what is prospective investor? Who is about to invest in your business, who is going to invest in your business. Suppose if I have the opportunity to invest in your business, so I will use your financial statement, to know whether I should invest in your business or not, so that I will not suffer a loss. So I am also going to be the user of the financial statement for your business, because I am the prospective investor. So even prospective investor is also going to be the user of the financial statement. Then comes customer. Now you will think, why customer is interested in using the financial statement? Why customer is the user of financial statement? Suppose if you live in India, and if you are using your mobile communication of Geo, for your mobile communication, so have you used the statement of financial information of Jio? No, you have not. Most of us has not used the financial statement of financial information of Jio, even though we are the customer of the Jio. Okay, so this topic is not about the end customer. This topic is not about the end customer. Okay, suppose if there are car manufacturer named Hyundai. Okay, suppose there is a car manufacturer named Hyundai. We all know what is Hyundai. Hyundai sell their car. Hyundai sell their car to the customer. Okay, Hyundai sell their car to the customer. Okay, so will that customer use financial information of Hyundai? Will that customer use financial information of the Hyundai before buying his car or her car? No. This topic is not about the customer who is buying the goods. This is not about the end customer. This is about the customer who is also in the business. This is about the customer who is also in the business. Suppose what is Hyundai? Hyundai makes car, but for making car they required certain equipment parts. Suppose tire. Hyundai purchases tires from JK Tires. Okay, so suppose Hyundai purchases tire from JK Tires, and Hyundai is about to make 1 lakh car. Hyundai is about to make 1 lakh car, and each car require 4 tires. So each car require 4 tires. And suppose in between the production they came to know that JK Tires are not going to be able to give them tire because their financial position is not adequate. So what is Hyundai? Hyundai is the customer of JK Tires for the tires which they will use in manufacturing of their car, which is going to be sold to the ultimate customer. Okay, so Hyundai becomes here the customer. So Hyundai will use the financial statement. The Hyundai will use the financial statement of JK Tire. So Hyundai will use the financial statement of JK Tire to know whether they are being able to fulfill my order or not. So I am talking about this customer. And not this customer. Okay. So in a supply chain, there will be many customers. Suppose if I have to purchase this Apple pencil, so I am the ultimate customer. But Apple even have to purchase something from China. So here Apple becomes the customer. I am the ultimate customer, but Apple is also the customer to purchase certain things to be able to purchase this pencil. So here the Apple becomes the customer. So I am talking about that customer. So that customer is also the user of financial information and financial statement. So here I am talking about the customer. Okay. Same goes for supplier. In this case also, suppose if JK Tires is going to sell tires to Hyundai. So JK Tires should know that whether Hyundai is able to pay them back or not. Suppose JK Tires has given 4 lakh tires. Suppose JK Tires has given 4 lakh tires because they are making 1 lakh car and each car require minimum 4 tires. Okay, so if JK Tires have sold 4 lakh tires to Hyundai. Okay, now JK Tire will use the financial statement of Hyundai to know whether Hyundai will be able to pay back or not. So here, who is JK Tire? JK Tire is the supplier. Who is JK Tire? JK Tire is the supplier. Who is Hyundai? Hyundai is customer. Okay. So here JK Tire will use the information of financial statement of the Hyundai to assess whether he will be able to pay the money of the tire purchase or not. So supplier also becomes a user of financial statement. So supplier also becomes the user of financial statement. Okay. Then, so what are the three people who are what we have studied now? First one is prospective investor, who is going to invest his hard-earned money in your business. Second one is customer. Customer is going to also use your financial statement, not the ultimate customer but the customer who are also in the business. Okay. Then supplier will definitely going to use the information or is the user of your financial statement to know whether you are really able to pay back money or not. Then you have government, local authorities and agency. Then you have government, local authorities and agency who are also going to use your financial statement to know whether you have paid correct tax or no, to know whether you have paid correct tax or not, whether you are indulged in any fraudulent activity or not. So government also checks and uses your financial statement to assess whether you are doing your business correctly or not. Then comes external lenders. Then comes external lenders like bank, financial institutions. They will also use your financial statement. They are also the user of your financial statement. Then comes auditors. Then comes auditors like ACCA, CA, CS and etc. who are also going to use your financial statement for the purpose of audit. So auditor will also uses your financial statement. And at last comes public. At last comes public. So in case of a public companies, public also becomes the user of your financial statement. So who are all the user of financial statement? First three are business owner, investor and employee of the company, who are the internal stakeholder, who are involved in the day-to-day business of the organization of the business. Okay. Then we have prospective investor, customer, supplier, government, local authorities and agency, external lending agencies, auditors and public, who are also the user of financial statement, and they are called as external stakeholder. They are called external stakeholder because they are not involved in the day-to-day business of the, they are not involved in the day-to-day activity of business. Hence, they are the external stakeholder. So these are the users of financial statement. First three are internal stakeholder because they are involved in the activities of the business, but the other are external stakeholder because they are not involved in the day-to-day activities of the business. Okay. So we have studied who are the users of financial statement. We have studied statement of changes in equity, and we have studied non-financial reports and statement of cash flow. Okay. Now we have to study types of business entity. We have to study types of business entity. Okay. So in what types we can have a business? We have to study that only. There are three main activities. There are three main types of businesses. There are three main types of businesses. Okay. First one is sole trader. First one is sole trader, or you can say proprietor. First one is sole trader, or you can say proprietor. You can also say sole proprietorship. A sole trader is an individual. Who is a sole trader? Sole trader is an individual who owns, controls and operates a business alone. Who is sole trader? Sole trader is a individual. Sole trader is neither a company nor an organization nor an association. It is only an individual. Okay, individual like me and you, who owns, control and operate. Who owns, control and operate a business alone. So who is a sole trader? Is an individual who owns, operate and controls a business alone. Suppose if I start my another coaching in the name of CMA Shobhit Paroha classes. If I start my classes in the name of CMA Shobhit Paroha classes, and I don't have any other person who is the part of that business. Only I am the owner. So I am the one individual. I am the one individual who owns, who controls and operate a business alone. I don't have any partner. I don't have formed a company. I don't have any association. So I am the sole trader who is going to own, operate and control the business alone. Businesses may employ people, but I can employ people even if I have started my own classes in the name of CMA Shobhit Paroha classes. Said I am the one who own, control and plan things alone, but I can employ people. I can have a peon, I can have a tender, I can have a receptionist who is my employee. So I can have employees in my business. Businesses can be sold as going concern by the owner. So business can be sold as going concern by the owner. Suppose if after some year of teaching I want to retire. Suppose after some year of teaching I want to retire and I have a classes in my own name. Can I sell my classes to some another teacher? Can I sell my classes to some other teacher? Yes, I can sell my classes to some another teacher who will use that business. So it is can be sold as going concern. Now what is going concern? Going concern means before stopping the business. So after finishing my batch, I can sold my classes to another person, another teacher. So without hampering the going concern, I can sell it to other person. Okay. So I don't have to start my classes and then sold it to someone. I can sell my classes in the form which I am operating. There is no legal distinction between owner's asset and asset of the business. This is the most important part. There is no legal distinction between owner's asset and asset of the business. That means suppose if I have my own classes, okay. So in my classes I have a projector, I have a OBS setup, I have a computer, I have a printer to be used in my classes. So there is no separation between the asset which is for my business purpose and which are for my personal purpose, because there is a no legal distinction. There is no legal. Focus on the word legal. So legally there is no distinction. So suppose if I have a loan, suppose if I have taken a loan to run my classes, suppose if I have taken a loan to run my classes, okay, and I also have a car, I also have a car for my personal use. So if I am not able to pay that loan, if I am suppose not being able to pay that loan, so can my car be used to be sold to repay the loan? Can my car be used to repay the loan? Yes, my car which is personal nature, which is in a personal nature, is also used to repay the loan. So there is a no legal distinction between owner's asset and asset of the business. So my owner asset, that is my personal asset, can also be used to fulfill the debts or obligation of the business, that is sole proprietorship. So what is sole proprietorship? It is a business where a individual means a person like me and you, not a company, not a firm, not an association, are the person who owns control and operate a business alone. Alone means no one else to support you. You can have employee but not a partner. You can have an employee but not a partner. You can sell the business as a going concern. You can sell the business as a going concern, and there is a no legal distinction between your asset and your business assets. So your personal asset can also be used to meet the obligation and liabilities of your business. So this is what sole traders mean and sole proprietorship means. Many of the businesses that we saw in India are run in the same manner, where we can see grocery shop or local shops, they are in the sole proprietorship. So even their loan which is they have taken for their personal shop or personal business can be repaid by using their personal asset. So there is a no legal distinction between owner's asset and business asset. Okay. Then we have second type of business entity. Then we have second type of business activity entity, that is partnership. That is partnership. Now what is partnership? A partnership is where two or more people own and operate a business together. What is partnership? Partnership is where two or more people, that is at least two people are required. Where two or more. So at least two person are required to operate a business together, with a view to making a profit, Now suppose in this case, suppose me and another teacher came together to start our classes, who are going to own, control and operate the business with the motive of making profit. So what this means? It become a partnership where at least two or more people come together to run the business are called partnership. So in earlier case I am the alone. In earlier case I am alone to start the classes and to run classes. So that was called sole proprietorship. But in this case, suppose another person comes to me to let's start the class. So we both form the partnership firm. We both will form a partnership firm where we own, operate and control the things with the view to making a profit. So at least two people are required to have a partnership. You can have more than two, you can have more than 10, 20, anything. But at least two people are required to have a partnership. Okay. Partners are jointly and severally liable for the debts or liabilities of the partnership. Partners are jointly and severally liable for the debts or liabilities of the partnership. Means, suppose in a business A and B company, A and B associate, okay, A and B associate, there are two partners, A and B, okay, and their firm has a liability of dollar 2000. Their firm has a liability of dollar 2000. So A cannot say that I am not going to be liable for this liability because I have not made this deal. I have not made this deal. Only B is responsible, and same goes for B. Even B cannot say that I am not responsible for this liability because I am not the one making decision. A has taken certain decision. So this is not the case. Both A and B are jointly liable. Both A and B are jointly liable for this liability. Are both jointly liable for this liability. So this line says partners are jointly and severally liable for the debts or liability of the partnership. So any liability or debts that the partnership has, all the partners are going to be jointly and severally liable. Then full stop. Unlimited exposure to debts and liability. What does that mean? Unlimited exposure to debts and liability means unlimited liabilities. That means unlimited liabilities. Now what is unlimited liabilities? Suppose A and B are in a partnership, okay, and they have a liability of suppose $10,000. They have a liability of $10,000 and they have asset of dollar 3,000 and they have a capital of dollar 3,000. Okay, so what is the total of their liabilities? Their total of liability was $10,000. And what is the total of their equity and asset? That is total dollar 6,000. So they have a liability of 10,000 and they have an asset and equity of 6,000. So now the differential amount of excess liability, the differential amount of excess liability that they have is going to be give unlimited exposure to both A and B. That means their personal asset can also be used to repay the debts or obligation, or you can say liability. So this gives the unlimited exposure to partners. Liability means even though there was a partnership between A and B and liability of the partnership was $10,000 and asset and capital of the partnership was $6,000, the excess liability that they have of $4,000 is going to be taken from their personal asset. So this gives the unlimited liability. So whatever the liability they have in their partnership firm, it can be repaid by using their personal asset. It can be paid by using their personal asset. So there will always a unlimited exposure to debts and liabilities. Full stop. No perpetual succession. What does perpetual succession mean? Suppose A and B are partner and A died and A died. So partnership cannot run. Because the most basic thing of the partnership, that is two people are no longer together. So it becomes sole proprietorship. Suppose A and B are partner A died and only B is left. So it becomes sole proprietorship. So whenever the partner retires or changes or dies, it hampers the perpetual succession of the firm. So there is no perpetual succession. If both the partners have gone, the firm will get closed. It will not be able to continue and does not have a perpetual succession. Okay. Again, full stop. Not required to publish their financial statement. Partnership firms are not required to publish their financial statement into public. They are not required to publish their financial statement into public because public are not interested in them. Public are not interested. Okay, they are they have much less exposure as compared to the company. So companies are required to publish their financial statement into the public, but partnership firms, sole proprietorship are not required to do the same. So they are not required to publish their financial statement into the public, like limited liabilities company, Okay. So what are the two types of business entities that we have studied till now? Sole proprietorship and partnership. What is sole proprietorship? Where a single individual is going to own, operate and run the business alone. It can have an employee, it can sell the business as a going concern, and it will always have a unlimited liability, and there is a no legal distinction between personal asset and the business asset. And same goes for partnership firm, where everything is same, but only there will be at least two people running the partnership firm. And last but not the least and most important is limited liability company. Limited liability company. So when I talk about company, so company is a altogether is a separate legal entity. Company is altogether is a separate legal entity. Means suppose if I start a company, with the name CMA Shobhit Private Limited. Suppose I start a company CMA Shobhit Private Limited, and who am I? I am a CMA Shobhit Paroha. Who am I? I am CMA Shobhit Paroha. I have started a company named CMA Shobhit Private Limited. So this person is separate from this company. This person is separate from this company. There is a complete separate legal entity. These are separate legal entities. So company is altogether a separate person in the eyes of law. So LLC is considered to be a LLC or limited liability company is considered to be a separate legal person in its own right, separate from its owner. So I am different, I am another person, my company is to be treated as another person. We are not together, we are not same. We have a clear distinction, between our asset and company's asset. We have a clear distinction between my asset and the company asset. Suppose that is not able and not possible in the form of sole proprietorship, but in company there is a complete distinction. That's why company is treated as a separate legal person. A limited liability company may be a private or a public limited company. It can either be a private company or a public limited company. Okay, so whatever the companies have private in their name, they are private company. And whatever the companies does not have a private in their name are not private company, they are public company. Okay, so like this, CMA Shobhit Private Limited, it is a public company. This is a private company because it has private in its name. But if I made a company with the name CMA Shobhit Limited, then it becomes public company. Okay, so LLC, a limited liability company, either can be a private company, either can be a public company. Ownership can easily be transferred in part or in full. Ownership of a limited liability company can be transferred easily either in part or in full. Means, who are the owner of a company? Who are the owners of the company? Suppose this is a company. So owners of the companies are called owner of the business. Owners of the companies are called shareholder. So shareholder can easily transfer the ownership of their company either in part or in full. So we have three types of business entity. First one is sole trader, second is partnership, and third one is limited liability company. Okay, this is all you should need to know about this entity, and then you will be able to solve all the questions regarding them. Okay, now we have studied today what are the remaining financial statement, that is statement of changes in equity, statement of cash flow, and non-financial reporting. Then we have studied who are the users of financial information and what are the types of business entity we have, and we have also solved some question regarding our previous classes. Okay, so this is all for today. I am going to give you some homework so you will be able to solve. Okay, so read all the notes that I am going to give and what I have studied today, and then please solve certain question. Okay, so I am giving you homework. Question number 2 is your homework. Question number 3 is your homework. If you don't get the notes, you can just take a screenshot and just give me the answer in the comment box, or either you can message me on the WhatsApp. My WhatsApp contact number is given in the description. You can use that also. Then again you have a question 7 as a homework. Question number 8. And if you have any doubt, please feel free to contact me. I know you will have certain doubt while solving this question, and that's good, because if you don't solve question by your own, and if I solve all the question in the classes, you will not be able to understand everything. So solving the question is important in home. So yes, okay, this is enough. I am giving you homework now. Question number 3, question number 7, question number 8. 3 question only, and let's have meet in a next class. Okay, so that's all for the